Byron Wien, one of the most widely followed on the money experts on Wall Street. He's the vice chair of Blackstone, $350 billion under management. Okay, I'm dying to know what direction, but first I've got to ask you what Donald Trump's economic plan that he outlined today. Your trained, experienced eye, what did you think?
Well, I think it's a lot of promises, but there's no, it's like a balance sheet with only assets, no liabilities discussed. How's he going to pay for this plan? You know, according to my calculations, this is going to at least double the size of the deficit. And that's assuming he doesn't get the whole thing.
Well, he is saying that if you cut taxes all across the board, that's, well, it's known as trickle down, or it's known as supply side.
The Republican platform has said if you cut taxes, you'll increase demand. I don't think there's really a lot of evidence that can support it currently. I'm not saying it didn't work in the past, and they cite the past. The Reagan tax cuts did have something to do with the growth at the time, but that was a different time period. You know, we're a more mature economy than we were at that point.
Is it stock market friendly? Is Donald Trump's plan something that would help the stock market?
Well, you see, the stock market's reaction is they just don't believe it. They just don't believe it'll all add up.
Do they believe Hillary's plan?
I don't think they're really wild about Hillary's plan. They're very confused about the economic sophistication of both sides.
Well, isn't that joyful for all of us? All right, let's get to your economic sophistication, and certainly with the stock market. Second half, you've been a bull when Gundlach and Goldman Sachs and Bill Gross, they're all turning extremely bearish. Are you? And then what direction does the stock market go by year end?
At the beginning of the year, Liz, and I think I was on the program, yeah. All year I've been saying the year's going to end down. Not a big down, but down. And the reason is there's very little top-line growth for American corporations. Wages are going up. Average hourly earnings are up 2.6% year over year. My belief is margins are being squeezed. Profits have already been disappointing this year. They're going to continue to be disappointing. Profits drive stock prices.
I'm hearing bearishness. I'm hearing bearishness, Byron.
Well, I said the market's going to be down, but I'm not forecasting a bear market. I'm only forecasting a market that's going to be down between 0 and 10%.
Well, you had also said at the beginning of the year on my show, one rate hike, that's it. How about December to add it?
That's the earliest.
That's the earliest.
That's the earliest.
So we will have seen none, because the last one is December.
Yeah.
The last one was December.
Yeah. They go from December to December, and the only reason they go in December is they felt that they promised something, and that's their last chance.
Okay, so knowing what we know, that you feel the market is going to be down by what, 5–6% by the end of the year?
Something like that.
Okay, that represents a substantial loss for investors because the S&P is up 6% right now. What do you advise people do with their portfolios? Just stay stuck in the mud and freeze?
No, look for the things that people hate. Those are always the good things to buy. There's some energy stocks that have good yields. You can buy them. There are some biotechnology stocks that I think have promising pipelines. You can buy them. There's some stocks in technology, information technology, that I think are attractive. But you've got to be very selective.
Isn't technology a little overheated? And that's Goldman Sachs' whole theory, that the market is fat and will remain flat.
Some stocks are, and some stocks aren't. You've got to be very careful about what you buy.
Is there a PE ratio that people should look for in individual stocks, a tipping point that says this is too expensive now?
Well, the market multiple is about one standard deviation above the historical median.
Right.
So the market is probably a couple of multiple points too high, at least one multiple point too high. Every stock has its own right multiple based on its growth rate. Right now, I definitely don't think you should pay a multiple greater than the growth rate.
Okay, and now I have to ask you about treasuries, gold, those traditional safe havens. Byron, people get nervous and they say, let me just go into treasuries. We know a lot of our viewers out there do that, or they want to go into gold. What say you about that?
I own some gold myself, but I view it as a hedge. As far as treasuries are concerned, I don't own a single one. I just can't believe that 1.5% is an adequate reward for holding something for 10 years.
So you don't own a single treasury, Byron?
I don't own a single treasury bond. I own some high yield bonds, I own some gold.
So no 10-year, no 3-year.
No 10-year, no 3-year, no short.
See, he's not scared. It's great to see you.
Great to be here.
He's still